Thanks, Michelle. Easy money in the U.S. is not on its way out yet, and a big change from July's meeting when the Fed envisioned 2 interest rate hikes before the end of the year. Now it sees just 1.
U.S. interest rates are staying the same for now. Fed Chief Janet Yellen said the economy can still grow at the current rate.
My assessment would be, based on this evidence, that the economy has a little more room to run than might have been previously thought. That's good news.
But there was more dissent in this meeting, with a larger number of Fed governors pushing to raise rates now. While the board disagreed on when to make the next hike, Yellen says they all agree to raise rates by the end of 2016. There are 2 more meetings to go.
Most participants do expect that 1 increase in the federal funds rate will be appropriate this year, and I would expect to see that if we continue on the current course of labor market improvement and there are no major new risks that develop and we simply stay on the current course.
Yellen identified at least one such risk. She says the Fed is concerned about a possible bubble in commercial real estate. Slow and slowing growth is a global problem, especially in the world's 3rd largest economy, Japan. The Bank of Japan adjusted its stimulus program. The BOJ is keeping interest rates the same while implementing other steps to reach higher growth.
In order to achieve the 2% inflation rate as soon as possible, we have decided to implement a new framework for the current quantitative and qualitative easing.
Chair Yellen says many major world economies are also pursuing economic growth through central bank policy. She says the Fed will monitor whether that approach creates more risk for the world's financial stability.
Now, the other thing that happened here is that the Fed also revised its outlook on the U.S. economic growth going forward, saying it will grow at less than 2% this year. The next Fed meeting, Michelle, is just a week before the November presidential elections here in the United States, so it's unlikely the board will raise rates at that meeting. That leaves us with the mid-December meeting as the most likely date for another rate hike. And you may remember, Michelle, that was the last time the Fed raised rates.